Test.
I'm
Testing,
hitting
testing.
the record button. We just got to our lucky number 13.
Baker's dozen. Let's do this.
I like it. We're good here.
All right, rock and roll. Who's going?
I'll do this one.
Let's do it.
Hello and welcome to the Lending Podcast. We are your host. I am Jeff Jones, and this is the infamous JB, Guru of Mortgage. I love calling you that, by the way. I've learned everything from you.
I think you may be the only one that thinks that, though.
Well, we'll find out, won't we, from this comments that people are going to be putting on this
That's
episode.
right.
So,
That's right.
This one is going to be about VA lending, and it's dear to our hearts. So tell us what kind of the quick summary is of what we're going to go through.
Oh my gosh, we do so much here at Benchmark to support our veterans throughout my mortgage career. Love working with our veterans, and this really also is the time of year where we, as a company, celebrate our veterans out there who've served. Thank you on behalf of both of us for your service. We have an event coming up here in mid-April, early April of 2024. We do it every year. It's our annual fundraising event and it's really actually not our company. Our company is a supporter of it,
right.
A major supporter of it. However, it is not a company sanctioned event per se, but it's called Boot and Shoot. It's up in Dallas, Texas.
Yeah.
And we have a skeet shooting competition. It's at the Dallas Gun Club. And we have a band come out. We have silent auctions. We have a ton of stuff to do and just a lot of fundraising activities. On average, we raise $1 million in a day.
$1 million in one day.
Roughly $1 million bucks.
Last year was a blast.
It was amazing. It's a great event. So it is really cool. It's coming up here on April the 11th. That's a Thursday. It is all day. It's at the Dallas Gun Club. If you can make it out there, that would be fantastic. Again, tons of stuff to do. Rudy's, shout out to Rudy's. They do breakfast. Shout out to Rudy's. They do lunch. They do, yes. And just our tons of other sponsors. And what this is benefiting is the Brain Treatment Foundation and Third Option and Mission Valor, which is one of our nonprofit organizations that we, through Benchmark, have started and supporting our veterans. So 3 different organizations that are benefiting from this. And again, we are so grateful for our veteran clients out there, our veterans that are listening to this, watching this, who have served or are serving now. Thank you for all you do.
And that's, I think, amazing that you and I get to be part of such a great company that Benchmark has been doing this for years. And it's such a way for us to serve those who serve. And even though we do an amazing amount of VA loans, this is just another avenue for us to give back to those who serve. But there is another thing, though, JB. I don't know if you know I'm going to ask you this question, but you're also on the board of a nonprofit.
Yes.
That serves veterans here in Texas and across the United States, right?
That's right. So yes, our nonprofit is called Warrior Companion.
Yeah. And
we provide pet insurance for service animals for military veterans who've struggled with PTSD and even some currently active duty. We have a gentleman who's an EMS ambulance driver, has a PTSD dog. And so we provide the insurance. We actually insure the animal and it reduces the pet insurance costs for our veterans. It obviously extends the life of the pet, extends the life of the veteran. We know how many veterans we are losing on a daily basis out there that are taking their own lives. And this is one way that we can put forth a valiant effort to stop that. So
if people want to learn more about Warrior Companion, because I think it's a phenomenal cause, how do they find out?
warriorcompanion.org is our website. And my partner in the nonprofit, his name's Jack. He was a combat medic in the Army for 9 years, served 2 tours, and has battled PTSD his whole life and has been just fulfilled in his life by the people around him and his animals. And I think it's made such a huge difference for him. He saw that as an opportunity to help others. And I said yes the minute he said something to me about it. I said, this sounds amazing. So I want to be involved, and we have been. It's actually been going for about 5 years.
Yeah. That's wonderful.
So thank you. Yeah.
Of course. Thank you.
Well, let's dive into VA lending here, and let's talk about what the opportunities are for our veterans out there, for our active duty military personnel when it comes to buying a house. And so there's a lot of questions that we get, of course, about what does it take to qualify? What do I need to do if I'm a veteran or active duty military? What are some of the basic things that I need, and how do I find out if I'm even eligible?
Yeah,
Right?
great question. I think a lot of people don't realize that if you are even currently serving, you can actually get a VA home loan while you're serving.
That's right.
Some people think that you have to already be discharged, and you need to be honorably discharged or actively serving, and also surviving spouses too.
Mm-hmm.
So
Yeah. So a lot of times, of course, our probably most common, we see veterans that are out of the military. They serve, they have been
trying to settle
discharged.
down.
That's right.
Hmm.
And so we'll get their DD 214. We know their branch of service. We know most, everything about their tour, how long they were overseas, and didn't necessarily have to be deployed, but in many cases you have been. And so now you're out of the military. We've got your DD 214. We are ordering something called a certificate of eligibility,
The
a
COE. Yep.
COE. That's
Hmm.
right. We said that in
Hmm.
unison.
That's good.
Yes, a COE. So our veterans can pull their own COE from the VA website,
Right.
which most common for us to pull it for them. But if you've already done this research, you may have already figured out that you are eligible. That's kind of rare. Usually we're uncovering that for you, but you're able to pull it yourself. On occasion, we have difficulty pulling a COE. The system through the VA just doesn't have all the information that we need. So we ask our veteran clients to call the VA. Maybe they need to submit some extra documentation. It usually takes a day or two, and then we get the certificate of eligibility. That tells us how much entitlement our VA buyers have. And the entitlement amount determines how much loan you can borrow, right? What's your mortgage balance, presuming that you're qualified when it comes to debt to income ratios. So there's a balance there of what is your entitlement with the VA, how much is your maximum loan amount that you can have, and then we do the normal calculations that we run for our clients to figure out what is your budget, like what can you actually afford.
Right.
And a lot of times, what you can afford is perhaps lower than what the VA maximum is, and that's pretty normal.
But I think that's good. So when it comes to budgets, what we've been doing this a long time, especially with VAs.
Yes.
Benchmark alone is ranked 22nd currently
Yes.
in the nation. Now, when we say ranked 22nd, that is volume. And that means that Benchmark Mortgage is number 22 out of 1,229 lending companies that have done VA loans
That's a lot.
last year. So we're in the top 2%.
That's amazing.
So to be in the top 2% of all lending companies just for VA loans, I think just speaks volumes of how well we take care of our vets
Well, and it's
and how much we do.
also, yeah, it's also the result of very strategic and intentional
Right.
action that the leadership of our company has taken over the last 5 to 10 years to really put our veterans and really put our VA lending at the top of our emphasis of growth. I mean, we've always had a good mix of FHA buyers. We've had a good mix of conventional buyers. We were probably in the mid 150s, I think, just a few years
Just a
ago,
couple years ago.
which is still in the top, however many percent, maybe
Right.
10% or so, 10, 15% of the companies in the nation. However, the leadership saw this and said, we want to excel in this area and really put a lot of emphasis on
Right.
helping our veterans. And so again, that's why we do Boot Shoot. That's why we do a lot of the fundraisers. Shout out to our colleagues out there as well. Nationwide, the Benchmark Lending team, all of our operations, loan officers, and team members that work tirelessly to support our veterans. It's pretty awesome, the growth that we've seen in this area, and that's really because of the intentionality.
Yeah. No, that's good. So I think I took us on that
Yeah, that was a good one.
trail. But basically, what we were talking about before I changed subjects was the income, the budget.
Yes.
And what I love about VA loans is there is a lot more grace of the DTI, the debt to income ratio.
Yes.
With VA loans. If you want to talk about that for a minute.
Absolutely.
And how it actually even goes up as the loan size goes up.
Yeah, for sure. So I think when you look at, let's just say the standard kind of 5 types of loans, right? So you have your conventional, FHA, VA, maybe USDA, and jumbo. There's of course a lot of other types of loans, portfolio loans, or what have you. But those just basic categories. When you isolate VA, what the VA has done, which I believe other types of loans should adopt at some point,
Correct.
is they really look at what are your monthly expenses above and beyond what's on the credit report.
Right.
Okay. So this is something called residual income.
Mm-hmm.
So we take your salary. We know approximately what you're paying in income taxes, to the IRS.
Right.
We know what's on your credit report because we can see those debts. And then we have a formula to figure out what are your utilities, what are things like electricity and water and cell phone bills and car insurance, all the food, all the things we pay for outside of credit. And so what the VA has done is they figured out a formula with our automated underwriting system that will be a little more liberal, a lot more liberal in some cases, on the debt to income ratio. So there is no maximum stated or maximum written debt to income ratio on VA mortgages. Now, the disclaimer here is certain lenders may put a maximum on there because they might have a guideline that they're trying to just adhere to
Right.
internally. But as far as the VA is concerned, we run it through the automated system. And so there's a lot of ways for a veteran to buy a little bit more house than perhaps on a different type of mortgage. And of course, as we know, it's 100% financing, right? So we run it through the automated system. We find out what the approval amount is. We can test those limits a little bit, and then also work within our client's budget. And then we're also able to manually underwrite those loans if the automated system does not approve it, because we do want to try to get an automated approval first. And so those are some technicalities, again, things that your loan officer is going to guide you through.
Yeah, no, that's wonderful. I like it. And, when we were talking about the COE, the certificate of eligibility, what that also allows us to see is if you've used the loan before.
That's right.
Right. And even if you have a current home that is, you bought with your VA eligibility and you want to buy your next one, but you're wondering if you have to sell it first. Do you have to sell that one first?
It's a good question. The quick answer is you can have two VA mortgages at one time.
You can.
You're able to do that as long as you are not borrowing more than your entitlement will allow.
Nice.
So you have to do the entitlement calculation, which will of course help you with, and then figure out what is your maximum loan that you can borrow on VA without selling. And then of course it's the discussion of, do you need to sell first because you need the proceeds to either pay off some debt or put money down?
Right.
Of course, VA, you don't have to put a down payment down in most cases, but there may be a reason that you'd want to. And so if you currently have a mortgage on your VA entitlement, it's gonna have a certain amount of your entitlement sort of held in reserve. And so we'll walk you through that.
And most people can't figure that out unless you're a lender. So there's some pretty impressive calculations going on behind the scenes. Let's just say that.
That's right.
So it's a complicated way to get there. But we have that ability to see what your remaining entitlement is for secondary entitlement.
Yeah, and a lot of times what our veteran clients are able to do is if they have their VA mortgage tied up with their entitlement, they could use another program called the Texas Veteran Land Board, which will allow you, it's amazing, which will allow you to purchase a home on a conventional loan if you don't have all your VA entitlement that you need. You could buy it as a conventional loan, but use the Texas Veteran Land Board, what we call an overlay. So it's a program specific for our veterans residing in Texas. And you can get, in some cases, discounted interest rates that works for purchases. It does not work for refinances, but it's for purchase only. And it's a really great program. You don't have to use it if you're selling, buying scenario. You can just be a first-time VA user of your eligibility and still use the Texas Veteran Land Board. It is a fantastic program. There's a couple things I love about it. Number one, the interest rates change once per week.
And they're public. So if somebody Googles, if you just go online and Google Texas Vet Land Board, it'll probably be your top three.
That's right.
And there's a link there for home loans. Once you click on that, everybody sees the rate for right now. So it's not something that you're going to get different rates wherever you go. You definitely want to use a lender that is very familiar with that program. But that's a phenomenal rate. You'll see two rates on there.
That's right. Two options. Yep.
And one is kind of their I don't know if normal rate is the right way to say it, but then their second one that's a lower number, their better rate is for people that are 30%, 30%, 30 more disabled.
That's right. So
So
if you have a
30% or more.
VA related disability
Right.
and it's 30% or more, then you're eligible for this discounted rate, which is a 0.5% less than the standard rate.
Right.
And that's fairly very significant, right? If it's a good sized loan, 0.5% per year,
And it's a great rate. It beats most rates on the market.
it does. It
Yeah.
does. So we're always looking for that. Again, this is the Tex Vet's available for veterans that are residing in Texas at the time of application for your mortgage, right?
Right.
So if you're relocating to Texas, it's tricky. You're not a resident here,
Yeah.
and may or may not be eligible for that. We just had that situation recently. However, we do like to explore that option. It may be something that we can
Yeah.
navigate through and help you to determine whether or not that's a good fit. And
And that
so,
and
yeah,
that TexVet land board does have a max loan limit,
it
which
does.
we'll talk about because most VA loans don't. But that one is in line with the conventional loan limit of 766 550.
That's correct.
Right. So
Yes.
so the TexVet does have a peak of a max loan limit, but if you're looking for a house under $767,000, then that could be a great program. Um, but since
But
it,
other VA loans don't. Yeah,
yeah,
the other VA loans don't have a maximum necessarily.
right,
So you could be in the 1.5 2 million
three,
plus. Yes, potentially, big VA mortgages that used to probably maybe 2 or 3 years ago, I think, required some formula of a down payment, and it used to be significant on loans that size, and now you can borrow 100% financing. We've done several VA
yes,
loans over $1 million,
yeah,
and no down payment required. Now no down payment doesn't necessarily mean
no
no closing
cost.
costs, right?
And I think that you'll hear a lot of marketing that makes JB and I roll our eyes when we see it because it gets us frustrated because it's a little bait and switch that might be there. There still is costs involved to the borrower unless things are structured a certain way,
That's right.
unless
So
that's written into the sales contract of help.
that's right. And so you want, in fact, we just did one over the weekend,
Yeah.
a VA offer that went in, and we're asking the seller to contribute toward closing costs. Now, in this case, my buyer actually has the funds; they could bring the money to closing. This is one of those discussions, though, up front. Does it make more sense to ask the seller to pay those closing costs, even if you have to negotiate the sales price differently, to hang on to your cash? And
Right.
that always comes back to what are our goals for our clients, and what is the comfort level of having a certain amount of cash in the bank. I mean, how much money do you want to have after closing? How much cash do you want to have in your bank account? So when we're looking at seller paid closing costs, every type of loan has varying guidelines. And so whether it's a conventional or a FHA or VA, each of those three types of loans has different allows the seller to pay different closing costs.
Right.
So for VA, it's 4%. Typically, the seller can pay up to 4% of standard closing costs. They also can pay, depending on who
There's
you ask out there, some number of buy down points. And for benchmark, it's up to 3% of additional buy down points, which we
so
consider customary.
I just did the quick math of
Yeah.
4 plus 3. So
What'd you
it's up
get?
to 7%
Up to 7%.
with benchmark
That's right.
of
That's right.
seller concessions can be available for VA loan,
Yeah. Whereas
which is
on
huge.
like
It's
an
more
FHA
than
loan, yeah, it's only
it's more
six.
than FHA.
Some conventional
Yeah,
programs will allow up to 9 if you're putting 25%
right,
down. But again, we're getting off on a tangent there. But that's where we'll help you navigate
right,
through, of course. So I think that piece, when we're having that initial dialogue with our veteran clients, and they know, or active duty, and they know they want to use their VA, really taking a deep dive on what are the costs associated with the
right,
loan. And we're talking about things like the appraisal, and we're talking about things like title insurance and home insurance and property taxes and all those things that, and maybe some lender fees that can add up. And if the expectations aren't set properly up front, 100% financing sounds like no money down, but it's not,
it's
right?
not. And I think this is where it's more important than ever for the real estate agent to be talking with the lender before they put the
Yes.
offer in. because then, hopefully the right conversations with the borrower and the lender have happened, the right conversations with the borrower and their real estate agent have happened, but the real estate agent with the lender need to come with a plan to see if seller concessions are needed.
Yes. And there's one additional cost on a VA mortgage that is not required, although I would recommend it on other loan types, and that is a pest inspection or a WDI report, which is a wood destroying insect report.
Yeah.
You must get a termite inspection essentially on a VA loan. And a lot of our agent partners either don't know that or forget that. Most know that.
Right.
Our buyers definitely don't know that. They're not expensive. They're maybe between $100 and $200 up front. Do it with the home inspection, but make sure you get a WDI report. And honestly, if you're buying any house, I would get a termite inspection in Texas. But that's
Yes.
that's just my opinion. But take that for what you will. But so those are some little things kind of that we navigate through. Circling back to the benefits, though, I mean, 100% loan, no PMI. There's
Okay.
no maximum loan size.
Let's just, for those that don't know what PMI is,
Right? Private mortgage
the
insurance.
mortgage insurance. So anything that's usually like a conventional loan that is under 20% down,
Right.
you're paying a mortgage insurance on top of your monthly payment.
That's right.
And that doesn't go towards any equity of your home. It doesn't go towards the interest on that. It's just basically a mortgage insurance on that you're getting not a benefit for straight up front.
Yeah. Private mortgage insurance, real quick, like you said, it protects the bank.
Protects the bank.
It protects the bank in case you default. They're requiring you to pay insurance since you didn't put 20% down.
Right.
Yeah.
But for VA loan, that goes away.
It does.
And it's not a part of your monthly payment. That's a huge help.
Yeah, and if you kind of research interest rates in general on VA, you'll find that they're typically slightly less than conventional and maybe in line with FHA. Depends on the situation, but generally speaking, I would say your VA rates are just a hair lower than conventional. So you're getting 100% financing, better than market rate out there in some cases, and or no PMI.
And a lot of times you have more buying power because it's residual income calculation instead of debt to income ratios.
Yes.
And that residual income calculation is much more favorable.
Yes.
For a larger loan limit.
Well,
not loan limit, loan size.
For the loan size, yes. I want to do a myth busters real quick.
Love it.
I want to bust a myth out there. So what we see a lot of times, what we hear a lot of times from our agent partners is that getting an offer accepted with a seller, with a listing agent, with a VA offer can be challenging, okay? Because the perception from the listing agent side and the seller side is that it's not as strong of an offer as someone who's putting 10 or 20% down or paying all cash or whatever. I'm going to tell you right now, VA loans, when you get through the pre-approval, I can't speak for other lenders. You get through pre-approval with Benchmark on a VA loan, that loan's closing.
Right.
So it is as good as cash when it comes down to, will this go to the closing table? Now, there are other variables. There's insurance requirements. It may be in a flood zone. There's title requirements. There's appraisal requirements. Yes. However, the borrower requirements, the borrower approval is ironclad. And that's something that we really want to educate our agents on, that in our sellers too. Of course, sellers that are veterans or have VA eligibility, they get this. And sometimes we'll see kind of a veteran selling to a veteran because they get it more than maybe a non-veteran seller or a listing agent who may not be as experienced writing a VA or accepting VA offers. Even a buyer's agent who may not be as experienced writing VA offers on the buy side. It is the strongest approval out there. And historically, VA loans perform better than all the other types of loans. I've seen charts and graphs and data showing this. Veterans, active duty military pay their mortgages. And so we as lenders, we want to provide that loan to our clients. And we see it, we just don't want it to look like a disservice to our veteran buyers out there when their offer is not accepted. They're like, well, what should I do? Should I put a different type of loan? No, we need to educate the listing agent, buyer's agent, seller that is the strongest offer they can get.
Love it.
Yeah.
Love it.
Hands down.
You feel like covered.
We did. We covered a lot.
Covered a lot.
Yeah. There's a lot more to unpack for
There's
sure. There
so
always
much
is.
more. And, you know, if you want more information about Boot and Shoot coming up in Dallas, if you want more information about Warrior Companion, and if you want more information about VA loans or VA lending, please get a hold of us or put your comments down below if you're watching this on YouTube. But we're here for you.
We are. Thank you. We appreciate you tuning in.